Welcome back. John, with AI changing distribution patterns and deglobalization underway, you're looking at real assets. What do you have in mind for investors?
Well, the analogy I like to say is that if you were the CEO of a Fortune 500 company and you had your supply chains in Asia, after everything we've experienced, with COVID and your supply chains were shut for, 2 years, let's say, if you're trying to rebuild that supply chain here in the US, it's going to take you like many years. So I just think that like your portfolio should own, industrial companies, material companies, like companies that make goods and services like here in the US, along with commodities, energy stocks, and just real assets in general to prepare for you for this higher interest rate, higher inflation world that we think we're going to be in for years to come.
But you're also suggesting prudence with portfolios because of this current environment and suggesting people hold on to cash.
Yeah, so I think you have to have a barbell approach. So like we like to say like, inflation linked assets, kind of like late cycle cyclical growth stocks is like one side of your portfolio. And then the other side of your portfolio, should be things like, alternatives, owning cash because cash gives you a high, rate of return, let's say on a relative basis. So kind of prepare for the recession by owning cheap, assets, but then also barbelling it with alternatives, cash, also trying to extend your duration a little bit. Like we've extended our duration for our portfolios, we've doubled it in the past year because typically what happens
Doubled
is
it too?
we were probably about 2/3, and now it's more like 5/6. And typically in a recession, the long end of the bond market typically outperforms. So that's kind of like this barbell approach that we're suggesting.
This is a big week for tech earnings, and a lot of attention will be on tech stocks. What's your take on tech after this remarkable 2023 run?
So, what I would say in general is that US stocks are priced for perfection. So you really need to have like a good earnings season to kind of justify the valuation that you're paying. So I do think we'll get out of this earnings recession per se. But if we don't have good earnings announcements from these big tech stocks that are going to announce this week, I'd be very concerned at the index level because so much of the S&P is being concentrated by these seven magnificent seven stocks.
Time for prudence, sounds
Time
like.
for prudence.
Thanks, John. Get today's headline news as well as timely analysis every day at QZ.com, and thank you for joining us.